Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Monday, July the 20th. The year's 2020. Let's talk trading. Trading step by step. Step 9. I'm going to go over what I call the physics or science, math of trading. But first, I just want you all to remember these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. So, the physics, the science, the math of trading. Well, think about it. Trading boils down to distance and time. If you really look at it, you look at charts and there's a open, then it travels either up or down or both, and there's distance created between various points, between the open and the high, the open and the low, and the high and the low. We call them ranges. So price ranges. That's just part of the physics. And that's nothing we can control. It's just something that it does. And the fact that it does it is one of the reasons the market exists in the first place, and gives us the ability, if we guess correctly, to actually take money out of the market. If we guess incorrectly, the market takes money from us. So, the science, the math, the physics. Well, if you think about it, the open, either the hourly or the daily or the weekly or the monthly, price is going to move away from it. And it's going to create either a high or a low for that time period. And then price is going to retrace off of that high and low. Maybe it comes all the way back to the open. Maybe it doesn't. Maybe it comes all the way back and through the open and creates the opposite side. If the high was first, it creates the low. If the low was first, it creates a new high. That's possible. And we see it every day. And that's one of the things that we kind of bank on, is that price is going to make that move. And the faster it does it, we start to call that volatility. If it does it slow, then it's low volatility. And if it does it fast, we call that high volatility. But volatility also has to do with the movement, the range. So if it ranges a lot over a short period of time, that's really high volatility. Now, it could range a lot over a long period of time, and that would be considered low volatility. But once again, that's based on your reference point, your time frame. And what does all of this have to do with trading? Well, everything. Because if we didn't have this science, this physics, this math, then how could we trade? So we know that price is going to move over time. So when you think about it, if you remember back into maybe your first year of physics, or your first year of what is it, calculus, I believe, when you start talking about velocity, distance times time, things of that nature, then you bring in the acceleration. If you remember those derivatives, but we don't have to get that fancy. We really don't. We can stick with addition and subtraction. That's all we have to do. A lot of people out there want you to believe you need, some really fancy math to make money, when in reality you don't. You really don't. You can just use addition and subtraction. So, what happens that we know this? Well, since we know it, we can take advantage of it. So, in fact, that's what, now let's see, that's the rat zone. That's what the buy zone does. It takes advantage of the fact that price ranges. So right now, we have a range of, it looks like about 139 pips. While the buy zone is 10 pips above the open, and the short zone is 10 pips below the open. So that's 20. You can't fit 139 in the 20. You see, it has to come out of one end, the other, or in this case, it came out of both. And that's the whole idea behind the physics and the math and the science of trading. I guess you could call it some geometry too. Point being is price can't stay inside this box. It just, not if it's going to range like this. And so we know that the pound usually ranges over 20 pips a day. So we know if we get in somewhere near the open price, somewhere near the open time, price is going to probably range away from it. And then if it comes back to it, once again, it ranges away from it. And whichever way price is moving when it hits the line, that's the way it's moving. So that's pretty much the way you should trade. So here, price was moving up and it hit the line, then price was moving down and hit the line. Now people say, oh, I would have gotten cut up. Well, maybe, maybe not. Once you see it's already gone through the zone, now you can start trading just at the open. You don't have to wait for it to hit the buy zone. You've already know its range. Now it could hit the open and reverse, but in this case, you see it was a nice move up, just like here was a nice move down. Basically, you trade what you see. It's not too difficult. Really isn't. Now, on the other hand, you can see price is making a new high. It's 1 pip off the high. Chances are price is going to roll over. We just don't know when. So how would we know when to trade that? Well, you just take your chances. You could go down to lower time frames. You could use mid dots. You could see if the next hour opens, if price makes a new high and reverses, or if it fails to make a new high, you have a H1 holo trade. So there's many ways to trade that reversal. It would be in the rat zone. You could wait for a rat reversal setup on the 5-minute or 15. There's many different ways to trade it. But you know from physics and the science and the math and the geometry that it's going to move away from the open, and then chances are it'll move back towards the open. Now, will it hit the open today? Maybe, maybe not. I don't know. It could. But that's why we have a market, because some people think it might, some people think it might not. So some people will be trading away from the open, and some people will be trading towards it. And so along those lines, you can even look at the different time frames. So we can go up to the monthly, and you can see here we've got the monthly open here. People could be trading away from it. Some people could be trading towards it. And as you can see, the last month had a huge wick. So we're in that wick zone. Some people might wait for it to break out of this wick zone before they even start trading. So there's many different things that can happen here. But that's pretty much the whole idea between the physics, the math, the science, the geometry of trading. It boils down to simple time and distance. Price is going to move, travel over time, either towards the open or away from it. So here we had an open, it moved away from it. Here we had an open, it moved away from it in both directions. And here we had a breakout of the previous high, which is something that we've talked about before. Okay, you can see here green at the line, the 50. Here was a previous breakout here at the 49. And here we have top of the hour. It's already made a new high. So we'll see what happens. It's making a new high as we watch. Maybe we can drop down to the M1. And you can see that. Oh, in case you're wondering, this is just a, whenever I bring up a default chart, it has the template name indicator here, and I just haven't changed it. So that's why it just says template name. That's one of those indicators I wrote. It's basically a modified TRO my notes that'll just allow you to put the template name here. So if you have a bunch of templates and you're taking screenshots, you know which template is which. And right here, so we have, this is the M1 high, this is the M1 low. And this is actually showing the wick zone here. And you can see here now, it's moving back towards the H1 open. We go back to H1. We could switch to M5 even. And there you have it. So it's all relative to which time frame you want to use the open, but most things are measured from the daily, the weekly, and the monthly. So that's what I choose to use. That's what I use most of my statistics based on. And just remember, you can't control that movement. You can't control the direction. You can control when you enter, which direction you enter, and how many lots you enter with, but that's pretty much it. And once you put that trade on, all you can do is either make sure you don't lose more than what you're willing to lose per trade, and that's your risk management. I've talked and talked and talked about that almost every video. Can't lose more than you're willing to lose per any given trade, and you have to take profit before the market takes it back, because the market will take it back, and it will take it back with a vengeance. So you can see here, I don't think we hit 60. I can't tell from this chart. Let me look at the other chart. Did we hit 60? Nope, not quite. So we haven't crossed that line. So you've got a short happening at 50, a long happening at 60, and you just wait and see what happens. Let's see, 1, 2, 3 pairs haven't filled the gap. You can see the pound filled the gap. Last night when I made the video, it hadn't filled it. Nowhere near that monthly opening range here, the first day of the month range, but you can see we got a huge range here for the day. In fact, 1, 2, 3, 4, it's almost ranged what it ranged last week. Big green bar there, you see it broke the previous day's high, broke above the inside bar 3 months ago. Last week was an inside bar, 65 is the trigger. We've got 1, 2, 3, 4, 10 pairs over 100 in range. And we've already seen the buy zone and the rat zone. Red rats, get ready to feast. Weekly R1 at 26,652 for you pivot traders. And we've taken out the daily. We've taken out the weekly. We've got a weekly down here that's missed. Wick zone in and out. Remember yesterday, I believe when I made the video, we were somewhere down here. You can see it just went right through this wick zone and then in and out of the other upper wick zone. And we're back here looking at this chart, looking maybe to go short at 50. So, fellow traders, just remember the physics of trading, time and distance. It's really simple stuff. You don't need higher math. Just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new here, click subscribe. and watch all of these videos.